model risk controls, and human-in-the-loop protocols. We have established guardrails around data security and model output validations, focusing on accuracy, hallucinations, fairness, and ethics. This is guided by our AI governance framework, which ensures that our AI solutions meet the highest standard of trust and compliance. Our approach is receiving strong validation not only from our customers but also external validations. We have had 26 independent AI-related recognitions, including 20 from Chartis Research. Additionally, we are collaborating very closely with S&P Global to learn, to drive adoption, to get best practices, and make sure that we stay ahead in the game. Thank you. With this, let me hand it over to Sanjay to cover some of the key risks for our businesses.
Thank you, Amish. I direct your attention to slide number 27. And at this point of time, I'd like to speak of three key risks that we believe are front and center. Firstly, macroeconomic and geopolitical risks. The current West Asia geopolitical uncertainty could lead to some delay in decisions and deferring of discretionary spend in our global businesses. On the domestic front, uncertainty may delay capex, therefore slowing borrowings and new rating revenues. There could also be weakened IPO pipeline due to market sentiment. Having said that, we've continued to pivot our portfolio to non-discretionary nature of spending and strengthen the focus on core across the portfolio. Furthermore, uncertain environments typically increase demand for credible risk opinions and insights, and this should augur well for our ratings and intelligence businesses. At present, our direct exposure to revenues from West Asia remain comparatively low. The second risk I'd like to touch upon is GenAI. The two key risks here would be the emergence of enhanced GenAI models and inadequate pace of GenAI adoption by organizations, which may constrain competitiveness and operational efficiency. As Amish just pointed out a little while back, we have already adopted a proactive approach to build domain-led GenAI solutions, capability development and upskilling to accelerate innovation and commercialization of emerging technologies, and deepen client engagement to stay close to client needs. The third risk that I would point out is foreign exchange risk. Sharp INR appreciation against the USD will have a negative impact on margins. We have a robust forex hedging process to counter negative movements of foreign exchange rates, and we will continue to monitor forex very closely. In closing, I'd like to say that we can take questions on these and the other risks on this slide in our Q&A sections. Having said that, thank you for joining. I will now hand over the room back to Amish.
Thanks, Sanjay. So I think let me reiterate, I think, we continued the good work of 2025 in the first quarter of 2026, focusing on, like we mentioned, client centricity, our analytical excellence, and making sure that we are leveraging domain-led AI to drive value for our clients and efficiency in our businesses to stay competitive. I think we are excited about all our businesses, and we are looking forward to making sure that we are able to drive growth while sustaining margins across our businesses and overall as a Crisil level. So with that, I'll open up for any questions that you might have.
Thank you, sir. We would now like to open the floor for questions. Anyone who wishes to ask a question may press star and then one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and then one to ask a question. Our first question comes from the line of Balaji Subramanian from IIFL. Please go ahead.
Congrats for a great set of numbers, and thanks for taking my question. I appreciate the color that you have shared in terms of your embedding Gen AI in your products. But it would be very helpful if you could kind of, describe in greater detail the opportunities and threats from AI in each of your businesses, right from, say, uh, India Waiting, GAC, Crisil Integral IQ, Crisil Intelligence, and Coalition Greenwich. Because what we understand is that, each of these businesses will have its own nuances, and some may be more vulnerable to AI compared to others, and the productivity gains also could be different across these. So, a detailed color on how AI will impact or benefit each of these businesses would be very helpful. Thank you.
Thanks, Balaji. I think, like I mentioned, I think Gen AI for us is a way to open more doors, to improve our competitiveness and drive better value for our clients and for ourselves. So while Gen AI increases the availability of generic content and basic synthesis, trust, proprietary data, and the defensible methodologies, regulatory credibility, and the human judgment, given the expertise that we bring across the work that we do, I think they become even more critical as differentiators. Across businesses, we see opportunities outweighing risk as long as Gen AI is deployed responsibly, and in our case, it is with human in the loop governance. So in our IP-led businesses, ratings, Coalition Greenwich, and also the work that we do in GAC, where we do work for S&P Global Ratings, we see AI as a great tool for enhancing both efficiency and effectiveness, right? Because of the being able to look at all the data, both proprietary data as well as data coming from different sources, the intelligence that we have over multiple cycles, and being able to leverage that using the best of models and tools. It allows us to actually enhance our effectiveness and efficiency and be able to really stay ahead in the game, as well as serve our clients better. When it comes to research, analytics, and consulting business, here we have a good proportion, again, being able to leverage our proprietary data assets in addition to other financial information. We are using Gen AI and automation in a way to enhance time to market, right? Deeper, more granular insights, better user experience, and open new revenue streams. I think we see this as a huge opportunity where we are able to really combine the power of our proprietary data, the ability of our experts and our domain experts to be able to leverage that data and the tools to come up with better insights, be faster turnaround time, better user experience, and also open up avenues where we were earlier constrained because of maybe capacity, capability, and things like that. So I think we are able to really drive larger business opportunity in our research, analytics, and consulting business. And in a similar way, when I look at our domain-led business on the global side, which is Integral IQ, again, here we use a twin track strategy where we are building on growth areas where Gen AI and deep domain expertise together drive superior customer value. I mean, as you are aware, Balaji, the work that we do here for our global clients, both on the banking side as well as on the buy side, sell side clients, a lot of the work happens across different areas of opportunity, whether it is on the risk side, on the regulatory side, on transformation side, being able to leverage the domain understanding, the expertise of our people, and being able to leverage the data which the clients might have, proprietary data, and the tools which the clients provide. I think that is something which we are able to demonstrate and go up the curve. Domain-led AI, that's something that we believe creates a new growth vector for us because it allows us to open doors, particularly in the mid-tier and the tier 2 clients. There are client segments where we are able to take our ability to understand the domain, leverage with technology, and be able to provide a much value-enhanced solution leveraging Gen AI is something which could allow us to open more doors and get more business in some of the segments in Integral IQ. So use Gen AI for driving effectiveness, efficiency, leverage to become cutting edge, both internally and externally. and be able to get better value for our clients. I think that's the thought process. That's the way we go across all our businesses and functions, and be able to train our people to be able to leverage the best tools available in the market, so that we are able to enhance the value and be competitive. So I think across each of our businesses, Balaji, there are opportunities out there which we are trying to leverage to grow our businesses. One is in our core businesses itself, enhance value to our clients, and then trying to go into new client segments, because once you are able to do that in your core businesses, you are able to actually go to your newer client segments and be able to demonstrate the value that you can put out in front of clients and help them get more business for ourselves and get better value for the clients. So I think that's been our approach. That's been the way we are driving across all our businesses. And the idea is to leverage the technology, leverage GenAI, leverage the models and the way they are coming out to enhance the work that we do to drive better value for our clients.
Thanks, Amish, a lot for the comprehensive answer. So is it fair to say that, some of the revenue compression worries that are there for the IT services companies, you would be almost completely immune to that?
Our endeavor is to, like I said, leverage the AI tools, I think build the capability with our people and ensure that we are delivering value to our clients to be able to minimize that risk. And, I think if we are able to do that well and then grow to newer segments, I would believe that, our endeavor is to try and ensure we minimize and we grow, and not get impacted by that.
Great. My second question would be on the discretionary spending outlook for global banks. While you did allude to the strength across businesses that we saw in the second half of CY25 and the first quarter of CY26. If I look at the commentary by Goldman Sachs in their earnings call last week, they were a little less upbeat compared to what they were 3 months back, understandably because of the geopolitical headwinds. And there are also worries on the private credit bubble. So, taking all that into consideration, what is your outlook regarding the discretionary spending for global banks? That would be my final question.
So see, we have not seen any decline in the level of engagement from clients in Q1 26 as a result of the current geopolitical situation. The ongoing volatile environment underscores the essentiality. I mean, in fact, in these times, they want more insights. So if you look at our benchmarking business, I mean, you're seeing global investment banks, leveraging the current volatility and being able to declare, very good numbers. But at the same time, they would need insights. They would need to understand what's happening. Similarly, in India, with all the clients that we work with, they are looking for better insights, sharper insights to understand the impact, what's happening. Discretionary spending by large global investment banks, I think it remains a key monitorable. However, what we have been doing over the last, couple of quarters is we are trying to diversify into other segments. As you look at our balance sheet, we have called that out. So diversify into, private markets, diversify into risk and credit solutions in the regional banks, which is the second tier banks, globally. And also, I think that's allowing us to offset if there's any, discretionary spend delay which might be happening at the large global banks. So I think we are trying to make sure that we are diversifying our customer portfolio and being able to take advantage with our, insights, being there when the client needs information to understand what's happening around. And our businesses are very well positioned to, I think, drive that, in the markets and the customers that we serve.
Thanks a lot, Amish, and all the best for the rest of the year.
Thank you.
Thank you. Your next question comes from the line of Arpit Kumar from Unifi AMC. Please go ahead.
Yeah, thanks for the opportunity. So my first question is, with the expansion of scope in the GAC engagement with S&P, could you just help us understand the unit economics of the business, particularly in terms of what is revenue margins?
Hi. I think this is a business where we partner with S&P Global Ratings. We have been doing this for more than 20 years. I think we are in our 23rd year. This is a business where we work at a transfer pricing fixed margin on the cost that we incur. And it is benchmarked, with whatever in the industry that we operate. So here the idea is to go and add value to our clients, being able to drive larger growth opportunity, not only within S&P Global Ratings, but to do work beyond S&P Global Ratings. And I think that's what we have been able to expand with some of the other divisions of S&P Global. We are trying to create centers of expertise in areas that we can make a difference and add value to our clients. So I think that has been able to allow us to grow and drive growth in the global analytical, the GAG division. And then that's what is reflected in the numbers that you are seeing. This is a part of our conscious strategy to actually drive growth across the different divisions of S&P Global and also doing work with S&P Global Ratings across the different parts of the value chain.
So, could you give the fixed margin number? Is it possible?
I think we don't disclose that. That is benchmarked. It is benchmarked with transfer pricing.
Okay, sir. My second question is if you could give more granularity on revenue mix within the RAS segment.
I think here, we don't disclose individual breakdown of the different businesses within the research, analytics, and solution segment. The big parts of that business are the two global businesses, which is the Global Coalition Greenwich business and the Integral IQ business. I think they are two material parts of that division and of that segment, and then followed by the intelligence business in India. I think that's how it is structured. But we don't disclose individual numbers of the individual business.
Okay, sir. Thank you.
Thank you. Your next question comes from the line of Varun Bang from Bandhan Life Insurance. Please go ahead.
Yeah, thanks for the opportunity. Can you hear me?
Yes, sir. Please proceed.
Yeah. So one of the key growth levers that we discuss is basically increasing wallet share across the segments, and that is within core markets, adjacent offerings, and new client segments and geographies. So could you elaborate on specific opportunities that are targeted in each of these areas and how companies are executing on them? And additionally, which new client segments and geographies are currently strategic priority for the company?
So let me address the second question first. I mean, like I mentioned, we have grown, we opened up the West Asia market, the Middle East market specifically. We have also, evaluating growth in, the private markets. We are trying to drive growth in regionals, both in US and Europe and around the globe. And these are regional banks which are beyond the top 20, corporate banks, the corporate investment banks. So I think there is an opportunity in different segments that we are trying to drive. We are focused across every market where there is growth in the financial services sector and in banks. I think, what was the first question?
Sorry, your first question related to where we are gaining market share, correct?
The wallet share. Sorry, let me come back to that. So I think here as a strategy, so let me take the example of our global businesses. So we work with our top 20, global corporate investment banks, and the stakeholders we might be working with are very different compared to what we might do with our, Integral IQ business. We will try and see how we leverage the opportunity of being able to cross-sell within the same bank, different services that we can offer. So, if it means going and meeting new stakeholders, if it means presenting the work that we offer, even within Coalition Greenwich, with the acquisition on wealth, we might be working with them on a particular area. How can we offer them the wealth offering and demonstrate value? So I think cross-sell is to expand the share of wallet in existing clients across the portfolio. and within the same business or the different businesses that we have, or trying to increase the share of wallet by getting in new offerings that we might have as an organization. So this is more around leveraging all the offerings that we provide across different businesses and making sure that we are present across the value chain in each of the clients that we operate in, and grow organically in each of these clients. And the same we do in India. I mean, I might be doing, let's say we might be providing data to a particular bank, might not be doing work on some of our credit solutions and other work. How do we leverage that as an opportunity, or vice versa? So I think, every client that we have, ideally we should be able to provide the full suite of offerings that we have, and we have them as our clients for everything that we do. So I think the intent is to drive that through our BD teams, through our business teams, and I think that's something that we are very, very focused on.
Got it. And on the GAC, there has been, of course, increased delegation and expansion into areas beyond ratings. Could you elaborate on what these new areas are, and how is this partnership with S&P evolving in terms of scope of work, its implication on margin, and strategic importance over the next couple of years? How do you see it evolving?
I think, as I answered earlier as well, I think on the Global Analytical Center side, we are focused on driving growth with S&P Global Ratings across their value chain, rightly put out there, increasing the delegation, surveillance delegation, trying to go up the value curve in terms of looking at various aspects of data, analytics, research. It could be on the technology side. That's something that we have started working on, creating COEs on program management, research, and being able to leverage technology and GenAI as a differentiator, adding value to our clients. So I think we are able to demonstrate the power of our people, being able to leverage the capabilities of GenAI, the domain understanding. I think that IP that we keep calling, people being our IP, is the key differentiator helping us drive growth, across different businesses of S&P.
And would you say the incremental business that we are getting, the margin profile is different versus what we were doing in the ratings for S&P?
No, see, we are doing similar profile of work, so the margin profile remains to be similar.
Understood. And on the ratings side, the domestic ratings business, what is the outlook from near to medium term perspective for ratings business? And if you can separately share it for BLR and capital market issuances, that would be helpful. And if at all there is a rate hike, would that materially change the dynamics for the bond market issuances, where we've seen strong growth over the last few years? What is your view?
So I would first caveat saying that we don't make any forward-looking statements. So I think that is something that I would want you to keep in perspective. But I'm going to request my colleague Subodh to maybe share on the other questions that you asked from a ratings perspective. Subodh, over to you.
So I think at a larger level, if you look at the ratings business, as you rightly said, I mean, it is driven by borrowing in bond market and borrowing in bank loan market. If I look at last couple of quarters in bond market, there is softness because yields has hardened. And at this point, it is a little difficult to say by when yield will soften, because the geopolitical situation continues to evolve. So we have to wait and watch and see how the progress happen in bond market. As far as bank loan market is concerned, if you look at the first quarter, particularly month of March, we have seen good numbers coming in. We are in the process of evaluating and understanding. From our side, we believe, we have already put this number in public domain that credit growth for the financial year 2027 is going to be around 13%, which is more or less same what we saw in 2026. But we have to see how it goes. I mean, if March is an indicator, probably there can be some upside in these numbers, but we'll have to evaluate and come back to you on that one. So these are the two big drivers as far as the rating industry is concerned, and depending how it goes, that can affect our performance.
Got it. And maybe directionally, if you can share your thoughts on the structural growth of bond market issuances versus bank-led credit, how do you see it evolving?
Sorry, I think general growth on bond market versus bank credit.
So if I look at this juncture, what we are seeing is some level of substitution of bonds by bank loans because banks are flushed with liquidity. And if you look at interest rate differential that is prevailing in the bond market versus bank loans, relatively favoring the bank loan at this point of time. But we have seen this situation in the past as well, and eventually we have also seen the situations reversal where bond market is. So from time to time, bond market can become lucrative, or from time to time, bank loan market also becomes lucrative. I do not think structurally there will be a major change as far as medium term is concerned, but this is more like a view, at a particular point of time when we see excess liquidity to the bank, or there are times, like I said, market favors the bond market. You also asked one question which I kind of missed answering last time about the interest rate movement. If the rate goes up, what will happen to some of this outlook? If rate goes up, it's a highly hypothetical point at this point of time. There's no specific indication from RBI that rate will go up anytime soon. But rate changes, essentially, what we have seen in the past is what I can tell you is that it does not favor, the bond market because it further hardens. So we have to see. But as of now, we do not have any indication from the regulator that the interest rate will go up in immediate term.
Correct. And you did highlight about GenAI and the platforms like i360. But if you could just share specific use cases where GenAI is already driving measurable impact, either in client acquisition, pricing power, or cost efficiency, and how do you see it translating into sustainable advantage rather than just if you can share some thoughts on this.
I think, like I mentioned to you, right, we shared that there are multiple initiatives that we work. I mean, in every area, let me put it differently. In every area of the organization, we are trying to see how we can leverage GenAI. If you have to think about client acquisition across different businesses, how can we leverage the intelligence that we can generate through GenAI? How can we make sure that we are able to have information available real time? So I think take the power of GenAI in every areas of work that we are working on and see how we can make things better for ourselves while we deliver value for our clients. I think that's the way we approach it. It is not across individual areas, but across the organization. How do we leverage the power of technology, power of GenAI in becoming better, in becoming faster, in differentiating ourselves in the market for providing better value to our clients? I think that is the way we want to embed GenAI thinking across the organization.
Okay, got it. Thank you for answering my question.
Thank you. Before we take the next question, a reminder to all the participants, you may press star and then 1 to ask a question. Our next question comes from the line of Pritesh Chheda from Lucky. Please go ahead.
Yes, sir. Some comments on the RAS business side, some total, what kind of growth will you see? Because, last year was about a 9 to 10% growth. Year before that was flat. So any directional comment, may not be giving out a number, but some directional comments on growth in this piece.
So I think the overarching comment I would make is that we are wanting to drive consistent growth across all our businesses. And we believe there is opportunity to grow across all our businesses, right? Whether it is the rating segment or it is the research analytics solution segment. Whether it is the intelligence business in India or the global coalition Greenwich business or the global integral IQ business. Each business have got their own growth drivers, own value drivers, so different market environment to operate in. So like we mentioned that in the first quarter this year, you've seen the global corporate investment banks, taking advantage of the volatility and doing well. Clearly, that would mean that they are looking for better insights on what's happening, and that has helped us take impetus in our global coalition Greenwich business. Similarly, in our different businesses, we are trying to drive value with new client offerings, new client segments, into adjacent spaces. In coalition Greenwich, we've gone into wealth. In integral IQ, we are trying to get into private markets and expand. We are already there, looking at new client segments like regional banks. So I think every business has got a strategy to try and drive growth, take advantage of the opportunity which is provided, and be able to grow consistent on a sustainable basis. I think that's the way we approach each of our businesses, and we believe there's an opportunity to grow across all our businesses in the markets and the customer segments that we operate in.
Any incremental pricing pressure, pricing comments on these pieces of businesses?
So each of our business operates in a competitive environment. So clearly, you will see the pulls and the pushes, which are normal to a competitive environment. I think it's our ability to demonstrate value to our clients while being able to, charge the right pricing, which allows us to make the optimum margin on every business that we operate in.
Okay. My last question is, any color on, or I don't know if you guys look at it, any color on the order book growth rate or, some metrics whereby we can judge on what kind of growth is possible in the RAS business?
Sorry, we don't, comment on our, on order books of individual businesses. That's something that we do not share.
Okay. But directionally, they are growing, and for us to comprehend the visibility in business is improving. Any comments from that side?
Like I mentioned, I think we are very much focused on driving growth across all our businesses. All our businesses are positioned well with all our customer segments, the offerings that we have, and we continue to focus to make sure as an organization we are driving that growth agenda. So that's where we are.
Okay, sir. Okay. Thank you very much.
Thank you. Your next question comes from the line of Abhijit Sakare from Kotak Securities. Please go ahead.
Hi, thank you. Good evening, everyone. So my first question is on the ratings business. Now, consistently, the business, the revenues are growing upwards of 16-17%. So would really appreciate if you could kind of spend some time to explain what's driving this growth. Because when we look at the broader parameters in terms of issuance volumes or even the large corporate credit growth, it doesn't seem to be kind of suggesting a similar level of growth. So is it the mix or the pricing, or if you're kind of gaining market share? That would be really helpful. And I'll take my second question after that.
Okay, so
Go ahead, Subodh. Go ahead for you.
So I'm assuming you're referring to the performance in Q1 of this year.
Yes, sir.
So if you look at the revenue growth, it is largely driven by a very robust surveillance revenue and also to an extent by new rating revenues. When it comes to surveillance revenue, in general, it is driven by the new rating revenues performance in prior year. So, for example, in what you're going to see in 26 will be largely driven by the new revenues we did in 2025 and partly what we did in 24. In those years, we had very strong momentum on new revenue, so that is now reflecting in fairly strong growth in surveillance revenue. So that is one of the drivers. Second, in the market, we continue to see investor preference for best-in-class rating, and this is where we benefit as far as near this concerned. And this is a trend that we have seen quarter after quarter that continues. Having said that, I just want to highlight one thing that typically performance in one quarter may not be indicative of performance of the entire year. So when it comes to rating, generally, I would recommend that you look at the performance of entire year. That will be helpful.
Abhijit, I would say, to add to what Subodh is saying, that is true for all our businesses, and I would request and recommend to everybody to, I think, look at annual performance so that you do not get swayed by let's say temporary seasonal effects or some fluctuation on account of timing. I think looking at it at an annual level helps you to get a much better perspective on how growth is happening for individual parts of the segments of the business.
Got it, sir. Just one follow-up there. Going a few quarters in the past, looks like Crisil and probably some of the peers as well are clocking growth rates which are consistently higher than what the broader indicators seem to suggest. So one would kind of attribute this to probably in the past years maybe mix between bank and bond, but at least for the last couple of quarters, it seems to suggest that even while the shift towards bank loan ratings is happening, it's not really dampened the growth in terms of overall revenue. So Is it that we are seeing new number of issuers, which is kind of helping in terms of better pricing or mix across, let's say, going beyond financial services issuers? Along any of those lines, is there an explanation to that?
So I think as far as other rating agencies are concerned, I may not be in a position to comment on their performance, what is driving their revenues. For us, like I said early on, that we are benefiting from IRF growth. If you look at last few years, IRF growth has been very, very strong, particularly post-COVID. We acquired a lot of new clients at good prices. That is really helping us, as far as the revenues are concerned for Crisil Ratings. Pricing is a very sensitive matter. Of course, deal by deal, we will not have a visibility of what's happening on pricing, but as far as we are concerned, we do work on pricing in a very disciplined manner. So that's all I want to say on this question.
Got it. This is helpful. So moving on to the RAS business and specifically Integral IQ. Now, generally, I think there used to be a common comment around discretionary spend towards the discretionary spend being a bit under pressure from most of the large clients. We don't see that comment being made this time. So is there any read into that? And secondly, like what we see for the mainstream IT companies in terms of Gen AI leading to some growth deflation, are you seeing that in the financial services space yet? And third is any comment on the competition from the GCC?
So let me try and address on the discretionary spend side, what we have seen, and I think I mentioned this earlier, that we continue to see engagement from all our clients across all our businesses, including global businesses. And I think the only impact, if at all, I would say, is maybe in terms of decision making. In some places, you might see that there could be more time that one might take while taking decisions, but we have not seen adverse impact of projects being cancelled. So I think that is something that is not being seen as we speak right now. And as long as you're able to demonstrate value, I think your conversations are healthy. Our diversification across segments, like we mentioned, helps to offset some of the discussions around discretionary spends, and that is why you don't see that in our commentary. So that is something that to keep in perspective. Sorry, I missed the other two questions. Sorry.
So the second question was on the risks of growth deflation from Gen AI adoption, and any context around how the financial services industry is responding to that.
Yeah, good evening, Abhijit. Yeah. So I think we believe the impact of AI will vary by business and client segments. I think we regularly review where the impact could be, and as you know, this is a very fast evolving space with almost some announcement every week. We stay closely aligned to what our client requirements are, and as adoption accelerates, we also try to evolve our offerings accordingly. I think Amish has already spoken about the fact that we have initiatives across all our functions as well as all our businesses, whether it is functions like client business development and sales, or whether it is technology, where we have launched Gen AI enabled products and offerings, or in businesses which are pure services, where we have used Gen AI to really enhance our efficiency and operational strength. So that's really what we see is more of opportunity than risks, and that's how we're really addressing the situation.
Also, I think specific to financial services clients, I think they are seeking help, and I think companies like Crisil are very well positioned because we understand the regulatory landscape, and I think everybody is looking at how do we do things in a responsible way, how do we leverage the domain expertise along with technology. So I think being able to drive that is allowing us to actually work with our clients in a very collaborative way. and or like I mentioned earlier, to try and see if we can, deliver better value to our clients in newer segments, which will allow us to open new opportunities, leveraging GenAI. I think we are seeing, GenAI being used, as Dinesh mentioned, largely as an opportunity. Yes, we need to ensure that all our people are trained, they are able to leverage the skills, they understand, the new models, the value that the models deliver, and I think, apply the enterprise risk and domain lens. Because as you know, most of the clients we work with are in the regulated space within the financial services domain. So I think they are very sensitive in terms of, how they want to leverage GenAI. And I think being able to understand that and partner with those clients, I think is important.
Right, sir. So there was one more part around the GCC competition.
So GCC is something that, has, always been an opportunity, and maybe I'll ask Suprabha, who heads our Integral IQ business, to maybe share a perspective. Suprabha.
Thank you. For us, GCC has always been an opportunity as well, because GCCs do need support whenever they set up their COE models or where there are regulatory remediations that they have to scale up for at quick notice. GCCs offer opportunities, and we've partnered very effectively with them. And that's how we see them in the past 2 years in terms of our overall strategy.
Got it. So sorry, just summing up on the international business, looks like there's no imminent risk to growth as well as margins. Would that be a fair assessment? Obviously, the macro risks still remain, but specifically with respect to Gen AI or competition, it's largely status quo, right?
So Abhijit, like I mentioned, we have to keep running at a much faster pace, right? To be at the same level. I think all of us have to make sure that we are going up the curve in terms of learning, leveraging the tools, leveraging the power of Gen AI technology, and being able to disrupt ourselves so that we can disrupt our clients. I think, I would say learning agility is going to be important in making that happen. But yeah, I mean, we are very, very focused on ensuring that, we minimize any impact and we actually take advantage of the opportunity which is presented by, being able to learn and make sure that we are leveraging our domain, our data, our talent, and working with our clients to partner with them to help them in that journey. I think that's what we are focused on, so that we can ensure that, we are not having any impact on our growth or on our margins.
Got it, sir. Just one final data question. So I noticed in the annual report, the headcount in terms of both on-roll as well as contract, that has gone up in the previous year. Any comment here and areas where you're adding people?
No, so we continue to add people across our businesses as we kind of invest in both growth across technology, Gen AI, as well as around client development and other areas where we believe those investments are necessary to continue to grow the franchise. So it's quite evenly spread. It is not specific to any particular area or business or segment.
All right. Got it. Thank you, Dinesh. Thank you, everyone.
Thanks.
Thank you. A reminder to all the participants, if you wish to register for a question, please press star and then 1 now. Our next question comes from the line of Saurabh Dhole from Fires Assets. Please go ahead.
Yes, sir. Good evening. I have 2 questions. The first one is on the ratings front. If you look at the last 5 years, what is the rough price increase you might have taken on a CAGR basis on a 5-year block period? So that is question 1. And the second question is that with respect to growing the business inorganically, if you were to evaluate the white spaces that exist today, what are those, and by when do you think you plan to, fill those?
So I think first question on pricing side, pricing is fairly, I'll say a complex subject, depends on time to time, how's the situation in the market, etc. That decides. I mean, there's no particular trend that I can share with you for the last 5 years. Like I said, we work on pricing in a very disciplined manner. That's all I can share with you.
Yeah, I mean, clearly, our intent is to make sure that we are covering inflation, the value of our work that we do, and be able to continues to sustain margins, in the right fashion, while delivering value to our clients. I think the second question that you are talking about, on the inorganic side, I think we continue to evaluate inorganic across the spaces that we operate and the adjacent spaces. I spoke about some of them. They are already articulated in our balance sheet. Wherever we can accelerate our strategy, wherever we can get better capabilities to help us accelerate our strategy, can maybe help us get newer client segments on our current businesses that we have. I think these are the areas of opportunity that we keep looking at. One example I can give you was, of course, Wealth Matrix that we acquired last year, that allowed us to expand. Wealth is a space that we are very keenly following in our global market as well as in India. I think we saw so that acquisition basically allowed us to accelerate momentum in that particular space that we are keenly interested in. The second one, as you know, we have taken a small stake in one of the SME platform companies in India. So I think we continue to evaluate and see opportunities from that light. Like I mentioned, 4 spaces we operate in, adjacent spaces that might be there, client segments which allow us to accelerate the strategy, build new capabilities to accelerate the strategy. I think these are the lenses that we look at. Of course, it has to make financial sense, and it has to have a justification, both from strategic and financial perspective, for us to expand.
Got it. And just one follow-up. When you talk about the 3 platforms under RAS, what is the level of cross-sell that you have, and compared to how far you can go on the cross-sell, where are we on that journey?
So I think there is enough and more opportunity out there. And then, like I mentioned, if you just look at any of the banks, the top banks or top customer, work that we do within the business. So if I was to just look at Coalition Greenwich as an opportunity, what we do on the corporate investment banking side, what we do on the transaction banking side, what we do on the digital banking side, what we can do with the wealth offerings. So each of these offerings a few years back is an opportunity. We had actually asked all our shareholders to approve a much larger limit, with the hope that we are likely to open more doors, and I think that's something that you are seeing play out. I think clearly, like I articulated earlier, we are looking at expanding across the different divisions of S&P in the areas that we can demonstrate value. So, whether it is, like I mentioned, from an S&P Global Ratings perspective, we work across the value chain. We are expanding into supporting them on the technology side. We are, looking at doing the same across different businesses of S&P Global. And as we are able to demonstrate value, to each of these stakeholders, how do we make sure that we are able to partner and grow our business with the different businesses that exist within S&P Global? So I would say opportunity is about being able to demonstrate value for the work that we do, and being able to partner with them to be able to take that to the next level. And these are areas of opportunity in centers of expertise across the research work, the analytical work that we do, the technology support. I think areas that we have been able to demonstrate value to S&P Global Ratings and some of the other stakeholders, and I think keep working through the journey. Transformation could be another lever now as people are looking at transformation. I think there are many areas of opportunity, and how do we engage and how do we demonstrate value to our stakeholders and continue to drive growth across the global analytical center.
Sure. So could we say that the growth that we have seen over the last couple of years could possibly sustain? I mean, the question is in the rate of the growth directionally.
I'm sorry, Bhavin, like I mentioned, we don't comment on any forward-looking statement.
Sure. Those were my questions. Thank you.
Thank you. Participants, you may press star and then 1 to ask a question. to ask a question, you may press star and then one. Our next question comes from the line of Anush Kumar from Spark PMS. Please go ahead.
Thank you so much for the opportunity and congratulations on a great set of numbers for the quarter and on the calendar year as well. So my question is on, like, if you could quantify what proportion of your analytical workflows are already AI assisted today, and where do you see the biggest productivity gains?
So like I mentioned earlier, we are trying to use AI across our value chain, across all the workflows that we have. I mean, all our employees are being trained to make sure that they're able to use different LLMs, the value of the LLMs, and use that to drive value for every work that is happening. Okay, so this is something that is across the organization, not in any one area or the other. Where we work in client environments, we make sure that we are leveraging the value of that for our clients. Where we are doing work in our own environment, it could be very different across different parts of the businesses, and there is no single measure, to give you that number.
Okay, thank you. So the second question is a bookkeeping question on what is the revenue for Price Metrics for the quarter, revenue, PAT, and EBITDA for the quarter?
Sorry, we don't disclose sub-business level numbers. What you have is only segment level number. It is the RAS segment and the ratings. We don't disclose.
Okay. Okay, sir. Thank you. Thank you so much.
Thank you. Participants, you may press star and then one to ask a question. Our next follow-up question comes from the line of Abhijit Sakhare from Kotak Securities. Please go ahead.
Thanks for the follow-up. So I just wanted to get a little bit more details on the comment on accelerated renewal in the benchmarking business. And how should we kind of now think about the following quarters? Does it like smoothen out some of the seasonality, or like what are you kind of trying to indicate with that time?
Yeah, that's right, Abhijit. I think this year we've been able to close contracts which typically we would close in subsequent quarters in prior years in the first quarter itself. So you're right, this will very much should have an impact of smoothening in subsequent quarters, and some of the seasonality that you've been used to seeing in the RAS segment should hopefully normalize to some extent.
Okay, got it. Thank you.
Thank you. As there are no further questions from the participants, I now hand the conference over to Mr. Amish Mehta to conclude the session.
Thank you, everybody. And I would like to just say that in the focus of the organization to continue to drive growth and sustain margins, I think that's something across all our businesses is what drives us. While leveraging technology, Gen AI, to be a key differentiator for all our businesses. That is something that we are working on, and then we will continue to drive that agenda. Thank you. Thank you very much.
Thank you.
Thank you, sir. That concludes the call for today. Thank you everyone for joining us, and you may now disconnect. Thank you.